Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, January the 16th, 2024. Markets basically had an inside day with a little bit of upside, a little bit of downside, and everything in between. Now, over the weekend, I had presented a little bit more bullish picture, which suggested that the S&P had full potential to get up closer to 5,000. Even under the current rearrangement of the count, I should say, it still has that same potential. And it can do it within a the primary B wave, yes, but within the minor wave 5 to complete intermediate wave C and then turn that primary B wave. So I'm going to start here on the hourly chart because that's actually where everything's got it revolving around, and it could cover us for the next couple of days. The action today was very torn by a very large move, of course, in Boeing, which continues to kind of suffer from the problems that they're having with particular aircraft. And Boeing ended up down 17 on the day, drifted just slightly, was about $1 lower at its low at 199.50, but still down 17 is a pretty heavy duty swing for Boeing and pulled the Dow down substantially. Going along with that, Goldman Sachs did have better earnings. They reported good earnings, as a matter of fact, so the stock was up. But the balance of that sector basically continued to not necessarily take it on the chin, but that was lower. We saw JP Morgan down, we saw Citigroup down, we saw Bank of America down. So again, Goldman's going to be the outlier that actually, because of asset management, trading, or fees, or whatever they want to call it, the company did well. Now, what we have going on here in the S&P. I'm again leaving this as minor wave 4, or I have returned it to minor wave 4. Before I had left this as an A, this is a B, and we were working a C wave down, which actually would have called for the market to drop below 47.02 down. I believe that the support for that was 46.75. Now, if I take it back on a little shorter term picture, again, which is our hourly chart, it's very doable. This actually can count cleanly as 5 up. Not the best, but as a wave 1, it fits. Now, this is where it begins. We have 3 down, 3 up, 3. Actually, it is ending up being a 5 down, but sloppy, very sloppy. 1, 2, 3, 4, 5, with a little bit of overlap. And you have to allow it just because of the nature of what the market is attempting to do here, because this ended up being slight new low, then 3 up. So again, either it's A, B, C, D, E, and we're going to go, but I've not seen a triangle pattern within a wave 2. Irregular within a wave 2, yes. So I'm kind of going to leave it as an ABC, going to say that the C wave has a chance of being complete, which again, then would put this small minute wave 2 in the complete territory. Came down and tested this hourly 200 simple moving average, held, bounced up, and then just continued to rally into the close. So we still have a MACD, which keeps trying to give us a little bit of a signal. And we've been looking for it to actually move back above the 0 line before we would consider this like the market is presenting us with a more upside or bullish picture. Here for the RSI, you're going to see, look at that relative strength, almost non-existent today. Market trades in a very tight range. So all in all, it continues to appear to be corrective, consolidating. And so I'm going to leave this as A, B, C. Now, leaving open the potential that the market could swing right back down, get itself down to 47.71, which is our next support, which is where wave C would be equal to wave A. and it would put in a ever so slight new low below this A wave low at 47.72. Put in about another point lower, and then so that, because right now it would end in a small failure. So giving it that additional little pull, and there's also the possibility now, right, that we're coming off and then we're going to come down 1, 2, 3, 4, 5, and then we could end up a little bit further down, but next support on a fib basis for this C wave would be 47.31, right in that area. So again, I'm going to leave open the potential that the market could come swing lower again, but continues to hold cleanly above 4,700 and then begins to rally again in a third wave up. Now, again, the market does feel tired. I mean, I've got a couple of comments from people today that the market is just feeling really tired and just getting a little old with what it's doing. And I don't disagree with that. And I do think that the narrative about interest rate cuts coming in March has kind of lost its shine. And in fact, if we took a look at the Treasury market today, they were down pretty heavy. They really were down pretty heavy. The 30-year bond was down 1.23. The 10-year was down 22 and a half. And that would be, basis points. So it was a pretty good down day for the bonds. Now, that also just brings out, it's like, so yields are rising versus being cut. And again, it's data, it's the dollar. Dollar was up pretty strong today. Dollar's back above 103, and we're actually thinking like, okay, you really think you want to start to cut rates? That dollar belongs below par or 100. And I do expect it to kind of get there, but it's just kind of futzing around and putting in this rally, which is tossing the treasuries lower, gold lower. So putting that into combination, the equity markets are really kind of just stuck. Well, we can't really toss a whole rally together here on the basis of where we're going to have rate cuts in March, because that's been tossed up into the air. So again, the market starts to consolidate, not giving up, I don't think, not giving up a rally that's going to eventually take us closer or above 4,900, closer to 5,000. I'm going to show you that in a moment. So first, I think we need to complete this wave 2. And we're leaving open that potential for 41.71 or in that area. And then a possible drop all the way down to 47.31. Now, once complete and we start to get a third wave going, where can that third wave start to come in? Well, our resistance levels are 48.81, that's 0.618. That is where wave 5 would be 0.618 of wave 1. Not the most common. The most common is right here at equality or 100%, and that's at 49.92, just shy of 5,000. So again, that 5,000 number, that 5,000 magic flashing light drawing in everybody remains. Now above there, we're into that irregular B territory, as I described and talked about over the weekend. For the S&P, the first line is 1.236, and that's at 51.16. Well, if this goes full rogue and comes in at 1.618, which actually is the second most common, we're talking about 51.71. So we can get ourselves, the market can actually get itself above 5,000, fairly well above 5,000, closer to almost 52 rather than 5,000. So again, those levels, that's a technical view, and they are possible should the market decide to turn and put in a big rally. Now, again, this week, shortened week because of yesterday's holiday, I don't think we have major economic news coming out. Today we had Empire State Manufacturing, and I'm not really sure how to read it, but it was not looking very good to me. And then, but tomorrow we have import prices, we have U.S. retail sales, we have the Fed Vice Chair, Michael Barr's out talking, Michelle Bowman's out talking. We have industrial production, all at 9:15. It's all before the opening. We have import price and U.S. retail sales, and then we have industrial production 9:15, cap utilization, and business inventories. We have the home builder confidence at 10, and Fed beige book at 2, and we have 1, 2, 3 Fed vice chair, governors, presidents out talking tomorrow. So that whole thing about putting Fed governors out there on the stump remains, at least last week and then again this week. So for tomorrow, we do have some numbers that could give us a little bit of a downswing and then set the rally. Let me pick up the rally again. If industrial production kind of not slowing, but maybe increasing, showing that we've got some output going on there. We'll see. We'll see how the market really wants to start to determine what's coming within the first quarter. We also still should continue to see earnings reports. And again, so next week, as I said over the weekend, it'll be next week where we get a good chunk of tech. So a good chunk that affects both the S&P and the NASDAQ will be more prominent next week. Okay, so moving averages. Let me just go out and take a look at the daily chart, which again still really does not look all that bad. Okay, so we did have two, I'm not sure what that is. Oh, that's just a small fib. I had that not really hanging man, but just a cross. Somebody else might call it a death cross. I just think it's just like straight in the middle bar, but kind of in between two down. Now, I don't think that it's really presenting a super negative or positive, other than we got below the daily 20, but it took it back by the close. So we also have the 8. The 8 is now working on itself to get back above that 20, which will start to give us a little bit of maybe a boost. For the balance, they're all still pretty flat and boring. So unfortunately, not a whole lot to talk about within the moving averages, other than not really showing us that we're just going to tip over and drop real quick here. Now, what I am going to do is go over to the NASDAQ and update that picture, which again, I've gone back to, remember, I'm running two counts together, and I presented the alternate or a secondary view on Sunday, where I was looking at that this actually would have been, let me just open this up just a tad, take a peek, that I was putting the intermediate A here, intermediate B here, and this was minor wave 1 of what would turn into 5 waves of minor degree to put in an intermediate C wave. And those levels were way up here. I kind of went way up here. Now, let me bring it back down. So the other count, the running side by side now, in all honesty, what I presented on Sunday was more bullish, I got to say. And then what I'm presenting again today is the one that I have been running side by side, where we have minute wave 3, minute 4, we're in a minute wave 5, and that is to complete, let me just take it back out, that is to complete minor wave 5, intermediate wave C, primary wave B. Okay, so what we're working on this basis is we have a minute wave 4, but we have minor wave 4 way down there. So this is all a minor 5th wave. And we are now heading up in that minute 5th wave. Now, what's going on inside of that? Well, as best I can see, it kind of looks like a couple of things. And again, this is going to be a wave 2, but the best way that I can count it is that an A, B, C, X, and then we're going to get another A, B, C. So let me redo that because, again, this does not fit because it's a wave 2. And I really don't see that fitting in. So yeah, and I apologize because I meant to do that before I actually started this. Let me just kind of go like this. And then we'll go from there. So what it can be is that, again, a double, an A, a B, we get a C wave down to put in a double ABC for a wave 2. So what can I put down as some support lines? And those would be just retracements. And so what we got, and we've already been down to 3A2, we need to come down and equal that 3A2 because this is basically turning into a big hole, almost a flat, but I would think that maybe we get another ABC down and we get back down into here. Now, what I also can put in, so there's our support, 16,780, 16,695. I'm going to take that off and let's fill in some blanks if I can. And we're going to go from here. I'm just going to run it this way. Up. Going down to there, going back. Come on. Got a new mouse and it just gives me hassles. If I just did it here, we've got an ABC and the whole thing maybe gets us down to 16,660, which again takes us below there, and it all fits to be a wave 2. Otherwise, then it's an A, B, C, B. So that could work as well. We have an A, then we have an A, a B, and a C. And so we got a B wave going on over here. So let me just show you that. These are all the possibilities because this market was very undefined today. It just kind of moved, and really what was moving it were NVIDIA and AMD. Today, they were like, go, 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 and really did well, pushing the market initially back above 17,000. Right, we got up as high as 17,033 or offset 17,034. So if I leave it as an A and a B, and we're going to do a C wave, let's check it out. Then we're going to be looking at here to here. Come on. To here and here again. So 16,729, which is where C equals A, and that's pretty common. So again, we got down to 16,812, 811 this morning, or overnight, I should say. So there's no reason why we wouldn't be able to go like 1, 2, we get a nice 3 and a 4 and a 5 and end up down here. So, and then we get a wave 2, and then we start to rally again. Now, again, when we're putting in for minute wave 5, it's going to be compared to minute wave 1. Let's take a look and see where those are coming in. The first equality, this is 0.618, not the most common, but I'm leaving it there because it likely is going to provide some resistance. But the ones that I will use is the equality, which is 17,595. So that actually is a very realistic number to complete this move up. We're going to get into that irregular territory, as I spoke about on Sunday. It's still possible under both counts. Again, on the count that I presented on Sunday, it's going to have a lot more oomph to get it up there and above and beyond. But if we're just taking it as it could be a minute wave 5 to complete minor wave 5, but complete intermediate wave C, etc., then we can, if it goes full rogue and we get ourselves up there, it can happen. When you're looking at it, so what we need to do is for Apple to kind of come out and say, oh no, we're not doing that bad. And we get a turnaround even with the downgrades, even with the fact that they continue to hit the stock. We get barn burners from AMD and NVIDIA. We get a halfway decent report out of Tesla. Now, again, the Magnificent Seven continue to carry a lot of weight. And if they're looking like they're going to go, or we're going to continue to move heavily into artificial intelligence, we should then see, I mean, Microsoft is up $1.80 today, but again, we're looking at 390. So that would suggest that Microsoft's going to blast itself above 400. And I think that their earnings are going to, from what I'm hearing, are going to be looking pretty good. So of all of them, I think Microsoft is, again, a very, very strong contender, number one in artificial intelligence, and number two, just to get itself up above. And of course, there's several more high flyers, I guess I would call them. We have Adobe, we have Lam Research, we have a lot of the tech stocks, and Intel, which actually they're knocking it down because they went out and bought a software company or just a company that produces software or chips for, I don't know, I can't remember if it was automotive or if it was one of the sectors, and which is going to strengthen Intel's position and chips for artificial intelligence, for use within artificial intelligence software. So again, not a bad do. So I'm thinking that Intel starts moving again, getting itself above 50, getting itself closer to 60, some of those upside targets. So again, there's enough going on earnings-wise that we could get a decent rally, taking us above 17,500, 600, and on up towards closer to 18,000. So that still exists. What happens kind of right now is that we start to feel that, well, you know what, markets are kind of running out of time here to get this all done. If we don't continue to get something promissory or just promising from the Fed, from any of the governors, from the market itself. Now, if I'm going to compare it over to the Treasury markets, in my view, the Treasury markets are working through a minor B wave down, and that's as part of an intermediate B wave up. So the B wave up is counter trend in terms of both yield, which is the rate, and also in terms of the Treasury price, the bond prices, the note price. So right now, note prices and bond prices are rising, but right now they're declining. So it's within this counter trend intermediate degree B wave counter trend rally, we have the internal B wave counter trend decline against the up move. So in any case, it's a B wave within a B wave. And so I think there's a little bit more left to go to the downside for both 30-year and the 10-year note. And I think once that turns, so will the narrative start to regroup and start to shine about, okay, we didn't see it in March. Okay, we're going to see it in June. We're going to, they'll start the conversation over again. I'm feeling pretty good about that. All right. Now, so what can we look for here over the next couple of days, or just maybe tomorrow? I think for tomorrow, here again, looking for this to kind of drop down, finish up this small second wave. There's our support, 16,730. Gets us below that low, which is 16,753. Nice, puts in a clean low. Dips below this hourly 200. And then like comes back and takes it back. And then we probably should see a strong rally. Now, again, what did produce this rally? Well, initially we did have a nice move, both in AMD and in NVIDIA, but Microsoft was up there and Apple was kind of recuperating a little bit, coming back up, and then that stopped, and then they just went bang, bang, bang. So I think given more time, the buyers would have just kind of bought it all the way back. But I do think it's just going to be a 1, 2, 3, 4, 5, get it down to here. Moving averages on the NASDAQ. Still pretty good. Same deal. We dropped down below the 20. We almost touched the 8. The 8 has turned and started to rise again. The 20 has gone flat, but it retook the 20 and closed well enough above it. So again, same deal, that it's flat, nothing really going on. We might just come back down, get ourselves down to here. and then rally one more time. So come down, test this daily 8, break it by a little bit, and then retake it into the close. MACD, not really telling us much, just kind of very, very flat. It's not presenting necessarily a bearish or a bullish sentiment from the market. All right, that is where I'm going to finish it up for today. Next update will be on Wednesday, January the 17th.